Hello traders, welcome to this live wave webinar. My name is Chris Svorcik from Elite Currency, and this is our part two, our second live webinar on wave topics, patterns, price swings, basically, Fibonacci, fractals, all of that are topics we'll be handling here. Not only wave patterns, but price patterns in general, basically, is our focus. And yeah, if you're always, of course, if you're interested in more, this is a free webinar, but if you're interested in more, you can get more through SWAT course, Simple Wave Analysis and Trading. It has, as I explained in the chat here, 70 plus videos, 20 plus hours of recording. So it's a very thorough education about price patterns in general. And you can become a member by either paying the course, or if you want a free subscription, there's also sponsorship available through one of our partner brokers. Okay, so just a heads up that you can get more if you wanted to with our course, SWAT course. Anyhow, thanks that you're here. A little bit late start, later start than usual. Thanks for your patience on that. We're going to talk today about the value of SWAT candles and fractals. I'm very excited about that. I'm manually testing Eurodollar 4 hour at the moment. We did a lot of work with some EAs recently. Myself. Now, that does take some time. I also will want to, in the near future, try to send some 4 hour signals for ECS Live and trade them myself with my own account. So I'm looking into trading on the 4 hour chart, and yeah, I hope to be ready with that in a few weeks and continue with that. So I'm excited. I am now kind of testing live and back testing as well. So, and it's starting good, so looking good. So let's see how that evolves over the next weeks. And in the meantime, also working on EAs as well. But yeah, all of that is time consuming and quite a lengthy process. Anyhow, let's take a look at the charts. All right, so 2 weeks ago, with the first part of this webinar series, we looked at the value of the 21 EMA and the 144 EMA. That is something really I can talk to you a lot about. I think that there's a lot of value with those moving averages. Today I want to focus on the SWAT candles and fractals. And specifically the fractals. First of all, let's start with fractals. So this is a normal candlestick chart, as you can see. And the fractals are very useful. These are different fractals than the one you will find on the MT4. The MT4 fractals you can find by going to Insert Indicators and Bill Williams. And there's nothing wrong with those fractals. I use my own fractals just because there's certain logic in these colors and symbols, and it's all automated, and the colors and symbols of these fractals change and are different depending on their relationship towards the moving averages. So it gives me a little bit more info. What these fractals indicate, basically, if they're diamonds, that means that we're in a trend, an uptrend or downtrend. And if they're dark green or dark red, it's a full downtrend or full uptrend. If they're light green or dark blue or pink or dark orange, then there's a retracement. So if they're not full dark green or full dark red, there could be a pullback or retracement going on. So that's what we saw here. For instance, here on the left. As you can see, it's indicating, well, there is a trend here, dark blue, by the way, but be careful, there is some struggle at this moment. Whereas dark green is indicating that the trend is full blast. Now, granted, the last fractal, of course, the trend is reversing. It's not indicated as a reversal indicator. It's just indicating that the trend is still there at that point, at least. Okay. Later on, we see that, of course, as price breaks through the 20 EMA, that it changes. But okay, so, and the circles indicate the level of retracement. So darker, more defined colors like darker orange indicate a sturdier pullback, whereas light colors like this, you see, these lighter circles indicate a light pullback. And that's the same for the downside. You see the dark blue indicating stronger pullbacks and light green are lighter pullbacks. Okay, so and then there is the gray and black circles with that correspond to a key level at the 144 EMA. So here you see one, and here you see that as well. So when price often breaks through those, or if it doesn't break through, it's typically a reversal. So here you see a fractal at the 144 EMA, and price breaks through that, there's a reversal. Here you see fractals at the 144 EMA, but price does not break through that, and there's a trend continuation effect. Here you see a gray circle, and there's a break through it, and there is a trend continuation. So often, if there's a break of those fractals, there's a good chance of a reversal. If there's no break of those fractals, it's a good chance that that's a bouncing spot for a trend continuation. So there's some good info you can read from these fractals just on their own. As you can see, we can go back even more here. Here's a break, and we got some type of retracement. Here there is no break, and there is a bounce instead. Here we got the break, and we got a reversal. Here we got a break, and we got a reversal. Here we have a break, a pullback and bounce, and continuation. So you can see how price responds to that 144 EMA, and the fractals at the 144 EMA. Anyway, they're not always going to give you a massive reversal. Like here, this is not a massive push up, but still it's a 200 plus pip move, right? Here there's a fractal. Actually, it's way lower than the 144 EMA, but it's still actually the first fractal after the 144 EMA, so it's still black, and you can see there's a bounce instead, in fact. Here, fractals at the 144 EMA bounce, but it's a bounce that goes sideways. ABC zigzag, and then actually eventually it breaks through this fractal for some push up, in fact. So, we can do this on and on and on. I mean, it's not perfect, nothing is, but I get a lot of value out of it. Here you can see fractals at 144 EMA price breaking through that, and in this case, a very strong push lower. We're talking about hundreds of pips. This was March, though. This was that big volatility push, so it's not necessarily the standard or so, but you can see that I think there's some good information to get from fractals at the 144 EMA and fractals at the 21 EMA. So we talked last week about the 21 EMA and the 144 EMA versus price and versus each other. I think the 21 versus the 144 EMA. There's a lot of value in that, but there's also a lot of value with fractals versus the 21 and 144 EMA. I just showed you some examples of the fractals versus 144 EMA, but fractals versus 21 EMA is also very, very, very powerful concept. And to reveal part of the strategy that I'm testing myself is actually I'm testing fractals versus 21 EMA. So far, it's very strong, very powerful concept. And you can see that as fractals break through the 21 EMA, that often when price breaks through that's when you get a big turnaround. So here, push above that. Here, the 21 EMA, the fractal, I should say, not price breaking through the 20 EMA, although that's the first clue, certainly. But the price breaking through the fractal that is away from the 20 EMA, as you can see. Now, not always will that give a strong push up. Here you can see it was just a 80 push. Recently was only a small push up. Here, there's a little bit of a bigger push up. Here we had today. Actually, my euro dollar, pound dollar video, I was already warning about the fact that if it breaks through this fractal, that there could be the fact that this is a bear flag. And it's starting to look like that, indeed. Or it has already done that, to be very precise. And price is breaking through that already, indeed. As you can see. So this fractal break, very important. The price has already moved from that level at 129, about 100 pips already. So yeah, this ultimately being a pretty nice bear flag, and the break below this fractal at the 20 EMA indicating an interesting continuation there. So these fractals at the 20 EMA really have a lot of value Not all breaks will go equally far, and that's why I'm creating some filters and sub rules to avoid false breaks and such, because here you can see a false break. Here you see small false breaks against the trend though. Here too, as you can see, one of them at least. So this is, this is more like a triple bottom, in fact, because the difference is so small. Here, as you can see, it's really nothing, right? It's more like a respect for the bottom than really a break, as you can see. Here we have a clear break. Now, sometimes price will oscillate around the 20 MA, of course. But typically, you get pretty smooth breaks. Not always. Here you have a break of a fractal, and then you get a deeper retracement instead. So it's not a perfect world. But it's typically a very useful info. And when you get a break, it's often a very good, a decent signal, good signal that price is going to go into that direction. Here, very nice continuation. Here too. Here you see a small break of below this fractal. So using some buffer is typically good. Also realizing where the long-term moving averages are. You can see the bearish break is running right into those long-term moving averages. And you can't really call it a break. It's just such a small difference. It's probably just a few pips difference here. Let's take a look. The low is 125.194. And here it's 125.121. So it's only 7 pips. Anything within, 10 and 15 pips, it's more like a double bottom than a break in my view. So this is, part of the strategy I'm looking into. I'm revealing that here. That's free info for you that I gladly share with you. I'm excited about that. And maybe I'll be able to make I don't know if we'll be able to make an E out of it. I don't know, but that would be maybe a next step. But let's see. I'm working on this, both this manual system and the EA version of that, using fractals and these moving averages. But in any case, in the meantime, I think it's very useful info for anyone, any trader who likes these concepts, at least who likes these indicators. I think it's good info. You get really a lot of value out of the 21 EMA, the 144 EMA versus each other, versus price, and certainly also versus fractals. And there's a sea of things that I have in my mind that I would like to test, but haven't had time yet. For instance, fractals at the 144 EMA, fractals that are not outside of the 20 EMA but in the 20 EMA, for instance, as a bounce, as a continuation potential there. Fractals that are away from the 21 EMA, there's really a lot of potential there to test and a lot of ideas that could lead to systems and subsystems and EAs, but that I haven't gotten to yet. So yeah, I think that, but in any case, my main point for today was, one of the main points at least, was the value of fractals versus the 21 and 144 MA. And I think that in these few minutes, you can already see that pretty quickly. You got to be, of course, careful that eventually the trend will retrace or pull back. So when there are multiple fractals that are away from the 20 MA, that's actually a moment where you got to be on guard for that such a retracement could happen, right? For instance, here you got 1, 2, 3, 4 fractals away from the 20 MA, then moving into these long-term moving averages. Well, not surprising that there's some type of retracement, right? As you can see. And indeed, you got that to the upside. Here too, you got multiple fractals above the 20 MA. Is the trend at some point extended? Yes. And that's, of course, how do you know if the trend is extended? Well, fractals are not a good thing for that, but Wiz levels are good. Indicating how far price can go, how far can price move away from the 144 MA. You see, it's all intertwined. Wiz, Fibonacci, fractals, moving averages, they're all nicely like Lego boxes, like Lego pieces fitting nicely to each other. So yeah, Wiz is good to understand how far price can move from that 144 EMA. Is there divergence patterns? Are there any key round levels close by, like a 135 here, for instance? Of course, could all indicate that the trend is overextended. And the time patterns as well. So we got 2, 4, 5, 6, 7, 8 candles here, not breaking the high. That could be a point where price indeed is unable to follow through on that trend, and indeed look at that time pattern indicating indeed the lower high. So if you have any questions, feel free to reach out. Generally with breakouts, I don't look at the fractals in the 21 EMA though, like this, by the way. This is my last point I wanted to mention. So let me know if you have any questions. Of course, as I said at the very beginning in my SWAT course, which you can get for free through one of our partner brokers like Key2 Markets or HYCM. You can get the entire course for free if you join one of these brokers, and through us. The second thing I wanted to mention is the Swat Candles. So but once again, if you have any questions on the fractals, let me know through the chat box. So now moving on to the Swat Candles. I think it's a very useful tool for, don't get me wrong, I really, really appreciate candlesticks, Japanese candlesticks. And I think they're a great price pattern indication. And I certainly use them just as much or maybe even more than my own SWAT candles, to be honest. But in certain moments, I do think that the SWAT candles are really, really useful. And it has to do with a confidence in a trade, I think. I think it's easy to get distracted sometimes by candles in a way. And in certain regard, these candles might not be that important at sometimes. All these bearish candles here, ultimately, they didn't change anything. They were just not making any reversals. They're all retracement candles. But I feel like that many of these retracement candles could scare us as traders. So what I like about this momentum is the fact that it keeps my eye on the ball and keeps my confidence in the trade sufficient, like it keeps it high enough to stick in that trade and not losing confidence in any setups. So that's one thing. Second of all is it's a easy way to kind of confirm a potential trigger and entry. Now I wouldn't trade all of these blue or red candles, but I do think that typically a blue or red candle has a good value. As I said, I wouldn't trade all of them because it does depend on the overall context. I think is important in my view, but many of them do pretty well just on their own. So as you can see here, for instance, we had a great, just to give you a random example, a great red trigger here, even this one, nicely moving to the downside, pullback, continuation, pullback, continuation, pullback, continuation. And these red candles did great. Now the blue candles on the flip side didn't go anywhere. So it's certainly important to, I think, first of all, focus on the trend. So in this case, it's clear that the trend is down. Look at those long-term moving averages, 144 below 233, which is below 610. 21 is below 144. So the blue candles are pullbacks, obviously. Red candles are with the trend. So in this case, pretty straightforward to focus on the red candles. That said, will this trend last forever? No. So at one point, it makes sense not to take the red candles if the trend is overstretched, and to maybe take the blue candle if the trend is overstretched. That requires some analysis. So the red candles are good for entries. Not only red, the Swat candles, red and blue. Gray, of course, is neutral, by the way. So good for entries and good for keeping in a trade and keeping confidence in that trade. But eventually, of course, the trend will end. There'll be divergence, as you can see, between these bottoms here. And then the blue counter trend candles actually do create some opportunity, as you can see here. Here, there was a good move up. There was one more last lower low that created a double divergence. One more push with the trend. That still worked out. But then also the next blue candle worked well, wonderfully actually, as a reversal setup. But the next blue candle here didn't, because after the big reversal, there was actually still a deeper retracement. As you can see, a 3-wave pattern, an ABC pattern here, and the blue candles were actually the wave B. All right, so the red candle still did well. The blue candle didn't, the next one didn't, because there was still one more lower low, but then the next blue one did for a bigger reversal. So context is still important to filter out ones, blue or red candles that might not work as well, and try to focus on the ones that could work better based on context and whiz levels. How far is the trend extended? Is it overextended? Is there divergence? What is the trend? Is there full trend alignment with a strong momentum? If you see diamonds like this, these pink diamonds, these purple diamonds, this is all part of the SWAT software, MT4 indicators, then there's a likely chance the price will still continue, as you can see. You see these diamonds, and indeed, in continuation. Here we don't have any diamonds anymore, and we have actually green diamonds instead, as you can see, and indeed we get a bigger correction to the upside. Here you still have 2 pink diamonds, but you still get a lower low after that, in fact, before you get the reversal. So those diamonds help indicate the momentum, and if there is momentum to that direction, there's a higher chance that pullback and continuations will take place. Whereas if there's no momentum and there's divergence and the price has reached high whiz levels, far whiz levels, well, then trading with the trend and trading reversal candles, SWAT candles, started to make more and more sense. So that is, it requires a little bit of analysis, yes, but these SWAT candles generally make it faster and simple. But if you really want to catch the SWAT candles that have the most potential, then yes, a little bit of analysis certainly is good. But I think that the SWAT indicators make all of that much easier and faster. Okay, now of course, it's sometimes when price is trapped in these long-term moving averages, that's a typical range. So breakouts will not work as well on average. You want price to move out of that range typically. But typically you can see, look, beautiful push up, beautiful push down, nice push up. Here you see downtrend with these red candles doing okay-ish, right? The blue candles we would skip because it's a pretty well-established downtrend at that point. This blue upside worked out well, but I think I would skip that because of the strong downside and the established momentum and trend and no divergence. And then nothing wrong with missing a swing here or there because we can't be perfect as traders. And of course, every situation is unique in the sense that every situation of price repeats, but is unique in a way because every point is a little bit different than what we saw in the past. All right. So yeah, I think there's it makes things a lot easier. I think you can see like a breakout here with these red candles with the moving averages aligned. Nice push lower. Then we get a pullback. You can see that this red candle didn't break the 21A. That's important, but here it does. And here it does. And those breakouts with the trend, as you can see, working nicely. There is no divergence between the bottoms. So we would not take the blue candles. We'd focus on the red candles breaking below the 21A, as you can see here. And that worked out very nicely for downside. And in fact, the reversal also, the ABC, the up ABC working nicely. And this, for those that do like Elliott waves, helps also a lot with Elliott waves because the red and blue candles indicating the price swings much simpler and much easier for traders to spot them than without them, in fact. So there's a big advantage there as well. If you're curious, by the way, about SWAT, there's also the option of buying our SWAT ebook just for 25 euros, by the way. Very affordable price, 600 pages with half of them with images, so very descriptive, very visual ebook, 600 pages. So that's one way you can dive into SWAT ideas and education without for a relatively affordable price, I guess, 25 euros. That's what I wanted to share today, really. I'm running out of time because Nenad is actually going to start his webinar in 1 minute from now with his weekly trading ideas. And I don't want you to miss out on that either. So I guess we'll wrap it up. We'll continue 2 weeks from now. We'll have this bi-weekly webinar on all kind of SWAT matters so that you get more familiar with these concepts and you can decide, do you like it? Do you want more education from us on this topic or not? But yeah, feel free to check out our website, of course, with a ton of analysis every day. Hang on, I'll share that with you very quickly. Here we go, elitecurrency.com, and webinars, of course. You can check out more webinars, and here with the blog, of course. And if you're interested in that ebook, if you're interested in SWAT, you can go to sponsorships if you want it for free, or if you want to buy it, you can go to services and Forex and CFD. But if you want just to simply start with the ebook, that's possible too, and you can find that right here for $24.95. Tools, SWAT guide. All right. Thanks for being here. Really appreciate that. And yeah, hopefully we'll have more manual trading signals soon for ECS Live, at least, and for myself on the 4-hour chart. And we'll be back 2 weeks from now. And of course, actually earlier, we'll have the Euro dollar. Tomorrow we'll have actually a live webinar on the automated trading systems. All right. See you then, and good trading. Cheers. Bye-bye.